Richard, I want to still pick it up on the retail side because you said the retail red book is showing negative comps and that rarely happens. You pointed out the times that it does, correct?
Yes.
So is that an aggregate of all of the retailers or what are they looking at to get that
Well, it's
negative
the
comp?
same. It's the same store sales for the retailers that will report it. So if Target
Okay.
reports their same store sales number, then you can use that number. Um, it's not going to show you, if they, if a retailer is building more stores and all that stuff, if Starbucks, let's say, made 400 new stores the past month, this isn't taking that into account. It's just the same store sale. So you're
Right.
seeing
Okay.
trends in comp markets have turned negative now.
And that's so important just because of the strength and the contribution of the consumer to the U.S. economy. But it's also important too because some people say, well, that number doesn't really matter. But to you, you think that this is a significant number that we should be paying attention to.
Well, it's extremely rare for it to happen. It happens in recessions, essentially, major crises, and where the consumer just hits a wall. It's extremely rare. If you think about it, you have inflation, right? Every year, prices go up. This year CPI is trending, right now about 3% year over year. So if prices are up 3% year over year, and your same store sales are negative, what does that say about unit sales? And
Right.
at some point
Down.
that comes down to a manufacturer somewhere.
Right. Fair point. What else are you observing in the United States that leads you to have concerns, is what it sounds like in terms of the outlook?
Well, I'll tell you. So there seems to be two different consumers right now. You have the higher end consumer that's spending. They're spending money. They're going on trips. They're traveling. I think one of the cruise lines recently said that they're having record bookings. So that's one consumer. The other consumer, we kind of define as the goods consumer. They're the people that they got their PPP loan, and maybe they got a new car, or they built that addition on the house, whatever it was that they wanted to do during the pandemic. The goods side of the consumer seems to be hitting a wall, and you're seeing it in a lot of places. If you look at some of the RV dealers, which is kind of an uber discretionary item, buying an RV, inventories are starting to pick up there. You look at it in some of the trucking industry, you're starting to see inventory pick up. So right now, the recession, not to use the R word, but the recession
Hmm.
appears to be happening in goods, not so much vacations yet. But I think that's going to be a more or less a factor on jobs.
And it's not really reflected in the market. I was actually surprised when I took a look at even the Russell 2000 yesterday and the outperformance that it's had. Because if people are buying into small cap, Russell 2000 small cap companies in the United States, that would lead me to believe that they do believe that the economy will have a soft landing, that the worst is behind us, and therefore we can buy into these small cap companies. Do you think that that's a bad move?
I think it's been a good move so far this year. The question is, what's going to happen going forward? And on a going forward basis, one of the things, the narrative that's been kind of flowing through the market now, and I think everyone now is fully in agreement on this, is that inflation is slowing. Everybody knows it. The numbers are coming down. But if you look at what the drivers of the slowing in inflation were the past couple of months, it's food and energy prices. What are food and energy prices doing right now? Well, they're shooting straight back up again. Wheat futures are up 8% today. Today,
Hmm.
soybeans are up 30% since the end of May. So if you think about that, that's going to be your next headline CPI reading. Is increases in food prices, and you're also gasoline moving up again. You have oil prices moving up again.
So, what do you think, or what are you expecting then? And let's look at the Fed, because we've seen other central bankers around the world also increase rates and continue to apparently do so in terms of what they're saying. What do you think the Fed's next move is, which is actually next week?
They've made it very clear they want to hike another 25 and maybe one or two more. And the question to me is, they're looking at data that is lagging, and the jobs data is always a lagging indicator. And so far the jobs data has been okay, but it's slowing, and there's particular adjustments that are done to the jobs data. I don't want to get too wonky, but when they do estimates for the birth and death of companies, and right now they think everything's great, and the birth of companies is historically high and trending higher. And as we start to see unit sales slow, whether it's housing or manufacturing or consumer sales, well, how many businesses are going to be born in that environment? So I tend to think the jobs data is reaching an inflection point, and I wouldn't be surprised in the coming months if you start to see some negative numbers on the payroll report.
Okay. We'll take a quick break. We'll be right back.